Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Having fast approached the top side level of 69 cents, the market is now staged a reversal and a key level that now puts the trajectory down to 67.35 for this week. As eyes turn towards the RBA minutes and also from the Aussie job numbers, the market is very keen to see what comes from that, as potentially we may be seeing a possible rate pause in Australia, as maybe we will be seeing one in America very soon. With one more 25 base point rate hike in the US, the market was somewhat relieved and maybe seeing an end of the Fed's tightening cycle, as hopes that the inflation is cool enough to get the US Federal Reserve soon to end its aggressive run of hikes to interest rates, and maybe from the cooling of inflation may only see one more, with the pricing in of 25 base points for July 25th, 26th when the central bank meets. Looking at the current pattern though, we are breaking down. We do need to see further confirmation to support this bearish case, and if so, then market will find maybe from a break of 67.80 to 67.35 and then a potential bounce. The reason why I say that is there is much work for the US dollar, even though it did bounce on Friday, not quite out of the bearish trenches, and therefore could see further choppiness in terms of how the market unfolds this week, as we now turn to this week's data, which looks towards the US retail sales. The euro, well, the market is a little bit indecisive at the top side of this range, around 112.40.60. As we can see here, there's a long-legged doji posted, and from there we are extremely overbought, which still warrants a pullback somewhere towards 111.35 for this week. As long as we don't clear that top side level around 112.40.60, then I feel the downside will be the risk, and also to see the fact that the dollar will try and attempt to climb out of its lows seen around April 2022 that was recorded at 99.35. Moving on to dollar yen, the market is still recovering, as I would say, from the key reversal that was posted on Friday, and therefore awaits confirmation. A break of 139.35 should promote further bullishness and a rally on towards either 142 to about 142.5. Any pullback, as long as we maintain above 137.15.25, still keeps this engulfing candle in play. Sterling, the market was a little bit eased to the top side, but I'm not going to get too bearish because I feel there is still potential for a further climb. Since reaching 130, the market may actually stage a further challenge and look back towards 133 is a bullish target. But as I mentioned, we are seeing a slight pullback, and given the fact we are easing out of the overbought area, then I'm looking back towards 130.30 and reassess. Gold also showing a bit of a pullback, as we can see from 1,964.66 was respected, and from the pullback could now see to 1,946 and reassess from there. Wrapping up with oil, the market fallen away from that topside challenge on Friday, which was looking towards $77 to $78, and now challenges the uptrend, which comes in around 74.50.60. Reassess from there, because a break of this trend would actually negate the topside target of 78 and instead reinforce the move back to 71. Well, that's a wrap for the start of this week. Thank you very much for joining me, and as always, look out for the intro report, and I hope you enjoy the rest of the day.